Egypt's central bank increased its key interest rate by 2% to 13.25% at an unscheduled meeting of the Monetary Policy Committee today. And we're joined by Allen Sandeep, Director of Research at Naeem Brokerage. Thanks so much for being with us. Now, the CBE says it hiked rates by 200 basis points today to combat elevated prices that are expected to keep inflation above 7% in Q4. How soon could this interest rate hike really have an impact?
Well, the way we see it, the CBE's move, although unexpected, the timing is unexpected. Interest rates may bound go up. Now, you should always look at it in perspective, in context of what's happening right now. It also coincides with the flotation of the pound, and we just heard news that we've agreed on an IMF loan for $3 billion. So this comes as a front-loaded move by the CBE in order to tame inflation that's going to come over the next 2 months. You have cost push factors. So inflation right now is already at 15%. So we expect that to go up going forward. So this is a front-loaded move. Although the timing was unexpected, but much anticipated market-wide eventually.
Okay, I'll ask you for your inflation forecast a little bit later, but following today's announcement, we've seen the Egyptian pound fall to its lowest level against the US dollar since 2016, and you're already seeing positive repercussions of this on the Egyptian stock market, aren't you?
Yes, definitely positive. Especially if you look at the Egyptian stock exchange, has been one of the lowest performers or the underperformers globally. We've been trading at 5 to 6 times earnings multiple, which is almost a 40 to 50% discount to other emerging market economies and so on. So why has this happened? Partly because of worries around the balance of payment situation and the FX liquidity situation on the ground. So that has led to a lot of outflows out of the Egyptian economy, in excess of $20 billion over, since Feb this year. So we expect a lot of those outflows to turn back into inflows now that we have more clarity about an IMF loan.
And how much of that $20 billion do you expect could return to the Egyptian market?
I think we'll have to wait for a couple of months, mainly from a foreign portfolio point of view. They'll have to wait and see where the pound settles and then make a move forward. We wouldn't be surprised in excess of $5 billion to come within a month or so if the pound remains as a float. So as a foreign portfolio investor, definitely this will be viewed as good news.
Now, the CBE says its decision aims to really ensure price stability in the local market and to anchor inflation projections. What are your projections for Egypt's inflation numbers this year and next?
We are right now at 15% as of September. We were at 13.6% in July, so we're already up by 140 pips over the last 2 months. Now, given the 15% devaluation that's happening right now, expecting the pound to remain at around 22 to 23 pounds per dollar, we expect inflation to be about 19 to 20% by end of December. So that basically front loads, what has happened today partly. Maybe you might see another rate hike of 100 pips to tame that inflation, which we might see by end of December peaking.
Okay, thanks so much for your input. Allen Sandeep, Director of Research at Naeem Brokerage.